Good morning, everybody. It is Friday, April 11th, 2025. This is Option Pit Live. I am Mark Sebastian. I am your only option, and I am joined by one Queen of the Candles, Licia J. Leslie. Good morning, Licia.
Good morning. How are you today?
I'm doing
TGIF.
all. I know I'm doing all right. It's a good, interesting morning. A lot of news hitting. A lot of news hitting that we need
A
to
lot of
unpack.
news, but not the movement, which is
No,
kind of wild.
it is. So we get nice earnings out of JP Morgan, although they were cautious on their
Guidance.
outlook. Good earnings out of Wells Fargo. Um, good, Morgan Stanley, nice set of earnings. Pre-market, Morgan Stanley down a touch, Wells Fargo down a touch, JP Morgan, down a touch, but all of them kind of basically unchanged. Take that as a positive post those kind of cautious earnings. And then we have PPI hit this morning, Licia, and it was a huge miss in the terms of way cool.
Okay. I'm sorry, but I'm not buying this fine line between inflation and deflation. With an economy the size of ours, we're so worried about inflation. Now suddenly it's deflating. I'm not buying it. Sorry.
Well, disinflation they love. Deflation means prices are obviously falling. The When
But
you
to
look at how
sound,
hot inflation was over the last couple of years,
yes.
um, you might argue that a little bit of deflation is not bad to kind of renormalize that line, right? You love trend lines, Licia, right?
Right.
And that
Yes.
big, huge inflation pop in 2022, 2023, that was way away from a trend line of normal inflation. Little
Yes.
bit of disinflation or deflation to maybe get us back toward that trend line, and maybe would make some sense here.
Well, that's my point exactly. I feel like I'm seeing headlines and alarm bells going off that, oh my goodness, this is all recessionary signals.
Yeah,
It, like I said,
things get thrown around right
yes.
now. With all the news out, S&P futures are up about 10 points. Um, that's I think the least movement we've seen on an open in.
A long time.
All right. I mean, I can't
Yes.
remember the last time we closed up or down less than 0.25%.
Sure feels like it.
NASDAQ futures are up about 23 points. Dow futures up 45. And then the one I'm really watching, and this is going to be my tell that we're really out of the woods, is the Russell 2000. Been so bad. And typically, if you're going to get a strong rally, you should get some leadership out of small caps, because small caps always lead on the way down. You're supposed to get a little bit of leadership on the way up. We have not gotten that out of the Russell 2000 yet.
Yeah. Well, I'm sure you're ready to talk about next. It's because of bonds, right?
Yes, it
And the
is.
rates.
Yeah. The bond market is just absolutely abysmal. And we've got more flashes. The thing that appears to be holding the market from starting to rebound is this Fed carry trade. And just long story short, traders buy bonds like U.S. Treasuries, the 10-year, and then they put those up as collateral and short futures against it. And there is a carry between, how much income, how much you make off the futures converging to the bonds. So it's not a huge amount of carry, but you do enough size, it starts to pay, and it's a low volatility strategy normally.
Well, that's the thing is the size that they have to put on to make the arbs worthwhile, right? The arbitrage worthwhile. They have to do it in massive size.
Right. So there's about $1.5 trillion in this carry trade, somewhere in that range. And what we've been seeing is overnight, you'll see that carry spread widen out. With the reason why President Trump kind of blinked on those tariffs was Tuesday night, a hedge fund in Japan blew out and that was doing this Fed carry trade, and rates absolutely exploded. We had a mini version of that last night. So my point is, if you aren't watching the bond market, you're basically missing the big piece. Tariffs kind of set the fire here, but if there's an actual explosion, like if we get that real terror, it's going to be out of the bonds. However, right now I'm not seeing us. I'm not seeing that yet in the bond market. Like not the bond market, in the stock market. So,
but the bonds are lower. The yield is higher today.
Bonds are lower. Stocks are up marginally, but we've not seen stocks really react. I was actually, frankly, on that Tuesday night shock. I was kind of surprised stocks were only down 200 points on the lows, because bond market problems are scary.
Yeah.
So, kind of how am I trading this? A two-way trade makes a lot of sense. You can do a couple of different ideas. One, VIX SPY makes a lot of sense. That's Andrew's going to come on and talk a little bit about that. If you want to do more of like a kind of a pair, you could look at like short bonds along the stock market, or vice versa. But if there's going to be a problem, it's coming from this bond market. Licia, what do you see in these different charts, between kind of spot SPX and Qs and bonds? Because bonds look scary to me.
Yeah. Here's TLT. I have support just below here, about 50 cents, 85.10 on TLT. And then below there, they're failing my median line support here. 85.10, and then below there, 82.72, 73. So yeah, there's room on the downside here for those to head lower. Just looking at the yield, there'll be some resistance here at 4.5, which makes sense, 452, and then trading up to that previous high, I'll take it up to 480. 4.8, I should say.
That is
on the yield. The interesting thing that I had found this week was that ES had stopped right at the Fibonacci 50% level on that low of Monday night, Sunday night. That's the one thing that I had as support. This is just mass confusion. These gyrations this large are just no one knows where we're going. That's all I got to say. It's mass.
It is.
I wouldn't go long anything until we start crossing these downtrend lines. Add these downtrend lines to all your charts. Don't go long until then. One thing I did write about last night, well, of course, gold. Bitcoin seems to be faring a little bit better than everything else. Bitcoin's almost close to buying. But gold? Look at gold.
I know.
Damn. Sorry. Pullbacks on gold, I think you're pretty safe. Silver needs to catch up. I'll be looking at silver calls today.
I like that. I like that idea, Licia.
Yeah, look at how it's much slower, but silver has room to come up. I mean, with gold like that, silver's lagging. 31.40.
Well, I think, silver definitely needs to catch up. You can read all about, if you're interested in Licia's charting and her analysis, you can sign up for Profits and Pumps. That is her newsletter. Comes out 3 days. Love you too. Comes out 3 days a week, and it's loaded with great information, actionable ideas, and Licia put a leg out there. I will tell you, and sometimes she hits some real home runs. So if you're not reading her newsletter, you're missing out.
We're now down 20 almost.
I know. Futures have rolled over a little bit because the 10-year futures just dropped about about 5 ticks. So they didn't like that. All right. So Licia, let's bring in. I'm gonna tell it. I'm gonna. Any other charts you wanted to hit before I let you?
Those were the most important.
Loose?
I'll let Andrew take over.
Well, we're gonna bring in Hans first. He's
Oh.
gonna give me an update on what's been going on the income side. A lot of people are wondering. Okay, well,
Awesome.
this with volatility up in the 40s, what are you doing? So let's bring on Hans Albrecht to talk.
Morning, everyone. Oh, I'm big.
And folks, Licia, Queen, have a great morning.
TGIF. Thanks, everyone.
See you, Licia. Yeah.
Morning,
so
Hans.
Look, when the market isn't doing the work for you, which it isn't exactly helping our 401ks. That's when income can kind of kick in a little bit. So, but having said that, we're looking for stability. So I'm hearing all the things you're saying, Mark, and I want to put a little silver lining on it, which is I think the really good news lately is that bond put showed up. And so it is about rates now. So, in terms of inflation, right? One of the pieces that people have been talking about is, well, what about inflation? We get stagflation, we get slow growth. High CPI was good, really good. PPI was really good. Okay, maybe there's some lagging effect there. But if you look at one of the big pieces of that, shelter keeps coming down. And that's a really, really big piece. So I think that's a really good positive. If you take out shelter, the cost of shelter, which is, of course, a huge expense. But if you take that out, we're kind of already at 2%. So I'm going to be optimistic on that, plus the good, decent unemployment numbers that we saw last week. And so I think what's underpinning what's happening out there is that the economy is probably stronger than people think, right? Sentiment's poor, but this has been very upsetting. And I think there's some element of paralysis that has kind of set in, right? For consumers, for businesses, they just step back. We're going to start hearing it on earnings calls that we're kind of wait and see. And so that's not good for sentiment. But I think that has a chance of being a bit more transitory, if I can use that famous term, transitory. Maybe once we get a little bit more clarity on things, then there's underlying strength out there, right? Okay, the stock market's down, but asset holders are still wealthy. Their homes are, people are generally still okay. There's tons of markets sitting in money market everywhere. So I think the economy is stronger than people think, and we're in this sort of moment of paralysis. So, but like you said, we're watching rates, 450 on the 10-year, not great. VIX is up. VIX was up this morning, even with stocks slightly up. So there's still some durable fear out there. There's no question. We can't ignore that. My SPY MTI, so the market temperature indicator, which you get in the turbo income, has been red since we dropped just below 6,000, 59.97 or something like that. It's been red ever since. So this is the kind of thing that can help keep you out of trouble. It's been red for about 1,000 points. And that means caution, hedge, and that stability isn't quite there. So in income trading, we want a little bit more stability. So I'm encouraged, and you've been talking about this too, I'm encouraged that maybe we've seen a bit of a high in VIX. There's still some things going on, right? So I always talk about how it's a bit like a cat in a room full of rocking chairs. I don't know why. I just love that saying. And so if we take some inflation worries out of the room, we're removing some of the rocking chairs. There are still rocking chairs there, and the cat's nervous. So the market is nervous, and we do want to see a bit more stability. And I think we're starting to see a little bit of that.
Yeah, I mean, if the bond market doesn't blow up, the VIX has probably topped out. Now, if that basis trade actually blows out, we'll have bad news. We'll have another leg lower. VIX will explode. Good news, that'll be our bottom.
Right.
But
That'll
the
be
bottom
it.
will be like 4,200, something like that. It won't be pretty.
That's the thing. Like, some people talk about how this is a bit sort of 2011-ish with Obama, but the difference was Obama was making a big effort to kind of fix things, and everybody's trying to gauge, well, how intent is Trump on heading in this direction? And I think he's pretty intent on it, right? So it's going to come down to there isn't that sort of implicit support that they're going to do everything possible to save the stock market. That's just, that put isn't there anymore. So that's what we're kind of dealing with.
Yeah.
So as I talked about this on Monday, I said, look, we got such a crush in the market that I think what's going to happen is, I didn't know what the reason would be, but I said, look, what we could get is this massive high correlation rally. So everything just kind of going whoosh, kind of like a big vacuum, just sucking everything up. I think it was, somebody was saying it was one of the broadest rallies of all time, as you would expect it was.
I mean, 12%. I mean, the NASDAQ was up 12%.
It was insane. Yeah.
And actually, if you look at where they were low to high, it's actually even crazier than that. It's almost
even crazier. Yeah, you're right.
Yeah, because we were down like 200. S&Ps were down like 200 points prior to that announcement, or on the lows of that day.
Right. That was the overnight
bananas.
You're right. That was the overnight breaking, the liquidation. So overnight we were down a couple hundred, and then
and the president doesn't care about the stock market, but one of the benefits of him having a real estate background is he does get credit, and he does get the relationship between rates and the economy. And my understanding is what happened Tuesday night spooked everyone in the Treasury Department. And when they explained what had happened overnight to President Trump, he got it and was like, okay, we got to do something, which is pretty interesting.
It was very interesting. Yeah.
So Hans, the market temperature indicator, you're waiting for it to kind of start giving you some green shoots. Are there any green shoots anywhere?
Yeah, I think so. And I think people want to watch that 9-day to VIX, the VIX 9-day to VIX. I think you want to watch some easy things. I think you want to watch that VIX futures curve kind of relax a little bit. Interesting thing on that massive rally that we had is the shape didn't really change. It shifted down, but the shape didn't change. And for everyone watching, that just kind of means durable
option prices. Yeah. There were still some of the same fears subsided. All right, Hans.
So my idea,
make sure
that we so the idea was that we get this big rally back, but now we want to be maybe a little bit more selective, right? So I'm not sure it's time to pile into Nvidia, for example. So I think some sort of growthy type areas could still be a bit challenging. So what we're doing in Turbo Income is I'm doing my scans. We've got this filtration process to get that number one amazing stock to do income on every single week. And interesting names that are coming up are names like Costco, right? So you take that and sort of intuitively go, well, that's very domestic revenue. It's really good loyalty. Like, how many people are going to cancel their memberships? Like 3. People want to save money, so they're going to keep them. So that's an interesting name. Fortinet, which is quality cybersecurity. I think things like that are interesting. Walmart is on the list, not the number one stock, but it's on that list. People just need stuff. So I think you kind of maybe start to get a little bit more selective, a little bit more, I don't want to use the word defensive, but a little bit more careful as we go into the next 3 or 4 months. So I don't think it's going to be smooth sailing, but it continues to be a trader's market where option pick comes in and helps everybody. So, and with option prices pumping, that's kind of where you want things. You do want more stability, but you want option prices nice and juicy so that you can start to really pinpoint those income trades. And that's what we're doing. I'm probably going to be putting on a trade today.
Okay.
And so it's been fun. And we actually did a pop-up session yesterday. So that's the kind of stuff you get in Turbo Income. We did a pop-up session on hedging portfolios and doing other things. So always something surprising going on in Turbo Income.
There you go, Hans. All right. So make sure you check out Hans's e-letter. What's I'm sorry, Hans, your e-letter, it's your newsletter that you put out.
The newsletter. Does it even have a name? Income.
Option Pit Income.
Option Pit Income.
Yeah. It's Option Pit Income. That's right. Make sure to check it out. He's got great stuff that goes out there. Hans, good luck trading today. I'll be obviously talking to you.
Okay,
let's
thanks, Mark.
bring on my good friend and yours, and Andrew T for two-way trades, Giovinazzi. And it's now time for us to catch up. So, Andrew, kind of an interesting day. That PPI announcement comes up. We're actually up 50 at one. Got up to about almost, I think, 50, and then we've kind of rolled over. We're currently down 20. Earnings from the banks this morning pretty good, but they're all like just down a touch now. But VIX itself, VIX futures, they're up this morning more than the market is actually down. A little weekend fear getting priced in a little bit. What are your thoughts on what's conspired over the last couple of days?
Well, I think we're at the point with stocks where politics is starting to matter. Like normally, Congress does their stupid stuff and there's the back and forth and whatever. But I think we're at the point now where Trump, the White House is trying to do a certain thing. They're trying to get inflation lower. They're trying to get interest rates lower, right? And they're doing the former, but not the latter, meaning interest rates have stopped going down. They're now starting to go up. This could be, we had again, like you said, the carry trade blow up. There's dislocations in the Treasury market from Tuesday, and they haven't gone away. So you have this, they're sitting here, and then you have Congress is debating spending packages at the same time. And instead of delivering any kind of meaningful spending cut, they've proven totally incapable of doing that. And I think the bond market is watching that. And generally, Congress, they believe all of their own press. They believe all of their own, whatever they read about themselves in the newspaper. And at this point, I don't think they're really doing their job. And they're the only ones that are tone deaf. However, they're the ones that have the power of spending. So you look at what's going on there and like, wow. So until there's any meaningful spending improvement, basically we've got, the Biden spending package and the COVID spending package, and it's not going away. So Trump owns the first one, Biden owns the second one, and now Trump's going to own the third one. So at some point, the bond market is going to just make Congress do something. And I think in the meantime, the reason why VIX is up is economically, I think things were, for the most part, okay. Transitioning out of government spending probably is a good idea. But once again, Congress not reading the room, I would say. And I think the Treasury market acting like it is today is saying, Congress, you're not reading the room, and we're going to wait until you guys kind of get it together. So as good as the AI growth and all the potential for all of that is extraordinary, we're at a point where I think the bond market is looking at what Congress does, and they're kind of voting with their feet. And this is in addition to potential less purchases of American treasuries and all of the turmoil from the China, from the tariffs and all the other stuff, right? So you need to start things moving in the right direction. If you see inflation going down or declining, bond prices should be going up. We need to get back to what I would call economics 101 stock market stuff, right? So JP Morgan, pretty good earnings, stock down because they're like, hey, things are kind of cloudy. So the short answer is we're going to have more of this turbulence in the short term until things start to get fixed.
All right. So with turbulence, what are you doing, Andrew?
Two-way trade. That's all I'm doing. Literally, I don't care about anything else from a trading point of view. Positions are basically
I'm sorry. I think I talked over you.
SPY.
What are you doing right now? You're doing
two-way trades.
Two-way trades. All right.
That's
now, two-way trades are, just for someone who doesn't know, It's a pair trade, but not the same type of pair trade you're probably used to.
Correct.
This is a trade that pairs option, the performance of option prices versus the performance of the stock market. So think about it this way. All right. Now we're using options for both these trades, but imagine I bought a call option on the market going up, and I buy a call option on option prices going up at the same time. When do option prices go up as a whole? When volatility goes up, the VIX. Okay. Remember, VIX tells us volatility, and volatility is just another word for option prices. So we buy option prices, we buy the market. If the market rips higher, VIX drops, market goes up. How do you do on that trade, Andrew?
You do pretty good, because when the rips rip, like we had a 10% rip this week, it's like you're closing your upside into the rip.
Absolutely.
Like, okay.
Now, what about when there are major dips like we saw Thursday, Friday?
Right. Well,
and
again,
Tuesday
because of
Monday.
the market that we have, all the VIX futures are below the cash. So there's constant pressure. Remember, because all the VIX options are trade off the future price, not the cash price. They're not the cash price until expiration. So you have a constant push up on VIX option prices. So if you're looking like, hey, volatility's too high and it's going to go down at some point, it will eventually. It's just not doing it today. So you still have future prices moving to cash. And it produces a nice trade.
Yes. Hey, Lewis, would you share my screen? Just want to show everybody this. So what you're looking at here, this is the VIX. All right. This is an April VIX future. This is a May, a June. When VIX is really high, volatility option prices are mean reverting. So, and futures are anticipatory of where VIX will be. They don't trade the current VIX directly. So without getting too into the weeds, what Andrew's saying is, if he buys the May future or a call option on VIX and for May, and VIX stays here where it currently is, this number needs to get to that number. All right. You don't need to know and folks, you don't need to understand. You don't need to be deep in the weeds of this. You don't need to be a expert to trade this thing. But when you are a member of, when you are executing two-way trades with Andrew, you will. If this is a little scary to you, don't worry. It shouldn't be. And Andrew's going to teach you anyway.
That is correct.
All right. So what a two-way trade executes, Andrew, is it's an opportunity to go basically have your cake and eat it too. What did we say? It's FOMO without the bomb. So we've come up with a new acronym. It is the belief of market. What is it? The belief of a market blow up. It's belief of market blow up.
I think it's the belief of market blow up. Yes.
Yeah, belief of market blow up.
And look at this right now. What is it? Look at the price of gold is just literally going to the moon.
Yeah. So with Andrew's trade, you are protected from the belief of market blow up. So if the market does blow up, you're good. But you also don't have to worry about FOMO, because if the market absolutely rips, you're good.
Yeah.
And that's the beautiful
thing
about
about this
two-way
is
trades.
like GLD is up $6.
And gold is going bananas.
Yeah.
So if you'd like to join two-way trades, I would invite you to give my team a call, 888-872-3301. Or, if you're watching it at Opier, click the link and join us. Speaking of clicking the link, Andrew, My understanding is you've got yourself a trading vehicle for us today.
It is 9:30, Mr. Sebastian. So
yes, it is.
It is. So my trading vehicle is basically VIX call spreads. Real simple.
Okay.
All right. You want to buy in the money VIX call spreads like the 30-45, 35-50, stuff like that. That will provide a lot of protection for low money in this crazy time. So the trading vehicle that's where we are today. And it is time to trade, Mr. Sebastian.
It is. So, Andrew, we are down, and folks, that's the piece of the two-way trade I was literally just showing you on my screen,
right.
that curve. So, Andrew, we're currently down about S&P futures are down about 29. The bond market looks a little soft here. What do you think, Andrew? Are we going to be inside, outside, or down big?
I think if bonds continue right now, the way gold is looking and Treasury are looking, I think this actually could end up being an ugly day. Corporate earnings from banks look good, but it feels like there's something else at work here. We should be kind of flattish and happily green. So I'm just saying the bond market, I think, is now wagging everything else, and you want that to be solid. If traders are running for gold, something's not quite right.
Yeah, there's definitely some bond fear there. Andrew, I would not be surprised if you are 100% right. I could see us staying inside while people kind of sit and wait, but maybe getting a little bit involved. But if we do get an outsized move without any more news hitting, it's likely to be down. All right, folks. Once again, this is your opportunity to join two-way trades. It's the perfect trade for this market. The information's here, or call my team 888-872-3301 and reach out to us. So for Licia J. Leslie, our Queen of the Candles, Hans J. Albrecht, our Imperial Overlord of Income, and Andrew T. for two-way trades, Giovinazzi, I am Mark Sebastian, your only option, and hope you have a great weekend.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.